Welcome to The Explainer. Today we're cracking the code on a market that didn't just recover, it completely reinvented itself. We're talking about uranium, and we're going to show you how just 15 key players can tell you the entire story of its incredible transformation.
So let's dive right in. You see, between 2015 and 2025, the uranium sector went through this massive structural change that, frankly, turned patient investors into millionaires and left a lot of the big institutions completely blindsided. The old rules, they just stopped applying.
And the answer isn't in some single magic chart or one metric. Nope. It's written across a carefully selected dashboard of stocks and financial vehicles that, when you read them together, give you a complete picture of this industry's rebirth. So, let's build that dashboard right now.
To really understand where we are now, we first have to grasp the dramatic shift the market went through. It was truly a tale of two different eras, a market of pure survival and then a market of explosive structural growth.
What's so wild here is the stark contrast. On one side, you've got the post-Fukushima depression. Prices were below $20, companies were going bankrupt, and they were cutting production just to stay alive. Then, on the other side, you get this complete renaissance, driven by the push for clean energy and, kind of out of nowhere, the massive power demands of AI.
And this pivot wasn't just a simple recovery, it was a perfect storm. There was this supply deficit that had been building for years and suddenly became undeniable. The world started re-embracing nuclear power. A new financial vehicle, SPUD, changed the entire game. And then, the power-hungry AI industry showed up as this massive new source of demand.
Okay, so let's see how this all fits into our dashboard. We're breaking it down into three crucial sectors. You can think of them as our primary signals for reading the entire market.
First up, the producers. These are the companies that give us the baseline for the industry's health. They tell us about production, pricing power, all that good stuff. And we're going to start with the ExxonMobil of uranium, Cameco.
This number, wow, it brilliantly illustrates the entire industry's journey. Just this one stock's performance, going from a little over $11 to over $106, it perfectly maps the sector's transformation from total despair to euphoria. When Cameco moves, believe me, the market pays attention.
Now, if one single stock tells the entire market story in microcosm, it's got to be Paladin Energy. This company went from a casualty of the bear market to an absolute powerhouse in the bull market, and its journey is incredibly revealing.
I mean, just look at this timeline. Paladin was a bankruptcy victim, totally crushed by low prices. Then, the new bull market hits, its stock surges, and that funds a mine restart. And then by 2024, the company that was nearly dead is now acquiring other companies. That was the definitive all-clear signal that this bull market was for real.
Okay, next up, the developers. Now, these guys are different. With no production, no revenue, these companies are a pure, high-leverage bet on the future price of uranium. Their stock prices are one of the sharpest indicators we have for long-term market expectations.
An 1,800% gain. Yeah, you heard that right. This just shows the incredible leverage you get with these developer stocks. NextGen's valuation, they own the world's largest high-grade undeveloped deposit. It directly reflects the market's belief that high uranium prices are here to stay.
But here's the crucial point. The single most important event of the decade wasn't a new mine opening or some government policy. No, it was the launch of a financial vehicle that completely, and I mean completely, changed the game.
This right here is the SPUT effect. Before SPUT, uranium was this opaque commodity, traded privately between producers and utilities. SPUT came along and turned it into a transparent, financialized asset where investor demand could directly impact the physical price. It was an absolute game changer.
So let's trace this thing, because it's this brilliant self-reinforcing cycle. Investor excitement pushes SPUT to trade at a premium. So SPUT issues new units, raises cash, and then uses that cash to buy physical uranium right off the market, tightening supply. This pushes the price up, which makes uranium stocks rise, which attracts more investors, and the whole loop just repeats itself.
And here's the proof in action. SPUT isn't just a passive player, it actively causes price movement. Its buying has become the single most dominant force in the spot market, period.
So it's a fair question, right? It all sounds good in theory, but can a handful of stocks really give you a clear read on such a complex market? Well, the data provides a pretty compelling answer.
This chart visualizes the leverage perfectly. So in a recent move, the spot price went up about 8%. But the stocks? The big miners jumped 17%, and the junior miners surged almost 22%.
The stocks don't just follow the commodity, they amplify its moves, which makes them really sharp early warning signals.
Okay, so let's make this actionable. A dashboard is only useful if you actually know how to read it. So, how do you use these indicators to see what's really happening under the surface?
You just run through these 7 checks. First, is money flowing into or out of the big ETFs? Second, is SPET trading at a premium and buying uranium? Third, what are the big producers, like Cameco, actually saying? Checking these signals, from capital flows all the way to speculative appetite, helps you distinguish between a rumor-driven rally and a real structural move.
And just as importantly, the dashboard also gives us warning signs. If SPUT starts trading at a sustained discount, its whole buying mechanism breaks. If the big producers suddenly flood the market with supply, or if M&A activity just dries up, these are major red flags that the bull thesis might be in trouble.
And that's our explainer. The uranium story is far from over. I mean, new players are going to emerge, from small modular reactor companies to new producers in Africa. But this dashboard gives you the framework to read the signals and understand what's coming next in one of the most dynamic markets on the planet. The real question is, what story will it tell you?